got about 5 minutes left of trade, by the way, and we are, of course, lower on equity markets. The 10-year yield, though, has been a big factor influencing equities. We are back below 3.2, but earlier today we did cross above 3.2 to 3.23%. That was a 7-year high, the highest yield we've seen on the 10-year since 2011, and it certainly was one of the factors that spooked equity markets today. Here are the 4 equity markets, the main indices, and you can see significant declines, albeit we are off the lows. The Dow down 356 points at the low of the day, and it's currently down less than 200 points, down only 192 points. And the Dow and the S&P both down less than 1%, and the Nasdaq down less than 2%. Those were not true about an hour or so ago. Let's have a look at the S&P 500 intraday to see how trade has gone. And of course, the lows of the day were around about when yields were at the highs of the day, and we've just recovered that final 2 hours of trade, as you can see, coming off the lows, down 0.8% now for the S&P. In terms of sector performance, only 2 sectors in positive territory. Financials, one of them, because of course they benefit from rising yields. Utilities, slightly strangely, because they usually suffer from rising yields, are higher as well, but they had a very tough week coming into this. Technology, consumer discretionary, communication services, all down more than 1%. And even though we've come off those lows, clearly a lot of negative and significantly negative sector performances. Joining me now, Kenny Polcari and Bob Pisani to talk through the action today. We've got about 3.5 minutes left to trade. We're down 200 points on the Dow. Bob, main story for you today.
Well, it was a little bit of a confusing day because we started out with the interest rate story being the main factor. We saw interest rate stocks weak throughout the day because of the higher rates. Emerging markets were weak throughout the day. But we had an additional complication with this China tech story. We saw NASDAQ notably weaker, and I think that was the major factor in why the NASDAQ stocks were notably weaker. We can't confirm any of the story, this Bloomberg story, but it definitely clearly influenced the market overall. Kenny, do you notice that weakness in the NASDAQ?
Absolutely. I mean, certainly that was the story when you came to NASDAQ and tech names, right? But for the broader market, I think you're right. It started with the whole surging interest rates really around the world, right? We're putting pressure on emerging markets as well as all markets. No one should really be surprised. We've had this massive surge in yields, and so therefore the market, we talk about valuations. The market has to back off at some point. And what's really the number that's going to tip the balance? Is it 3? Is it 3.5? Is it 3? Right? And so.
And Kenny, in terms, we have had record highs for the Dow recently. So your clients that are selling today, are they now turning bearish, or are they just taking a bit of profit?
First of all, you're making an assumption that I was a seller today. Why are you making that assumption? Just because the market was down? In fact, net, I was a buyer today.
There we go.
Because there you go. Because in fact, there are some people that are looking at value in this. Right?
Did that kick in halfway through the day as well?
It probably kicked in early this morning.
I don't know who your clients are.
A little bit. No. Shh, can't talk about that. No, early this morning, and then they took a breather, and then, as the day kind of settled in, because after we broke 2,900, which was a round number, I think people stood back for a minute just to see if it was going to build. And when it didn't, then you kind of stick your toe back in the water and you come back in.
I want to go back to your point about the rate story here and how high will it go. Corporate bond yields. Now, we haven't seen those spreads widen between the corporate bond yields as well as their underlying treasuries yet. But if that does start to happen, that means funding costs for corporations are going to go up. And that's what everyone's trying to figure out. Right. We haven't seen that yet, but that's going to be the little bit of concern.
Right, and that'll be the concern when we start to see it, right? That'll be the problem.
Wage growth tomorrow, that's what everybody's looking at for tomorrow. Of course, the non-farm payrolls report, we're expecting 2.8% yearly growth in wages. If we get a little bit stronger than that, you're going to definitely see this rate hike story come back in a big way.
Will we see banks continue? I mean, you've been looking for sector leadership for a while. At least banks are positive.
I am surprised that the banks have not responded better to not just only the hike in yields, but the steeper yield curve. It's notably steepened.
When everything else is
They're up very, very modestly, though. Given the dramatic underperformance of financials, and we and I have been talking about this in the last 3 months.
They're down 5% in a week and a half.
Final thoughts, Kenny? 10 seconds.
The bell's going to ring, so my final thoughts, I got to get out of here.
You've got to get out of here. Bob, your final thoughts then. What are we watching tomorrow?
Again, tomorrow, 2.8% wage growth expected on the year. If we get notably higher than numbers that, this whole interest rate story is going to have a lot more life.
There goes the bell. The low of the day for the Dow was 356 points, but we're closing down around 200 points. They're still down the best part of 1% and down the best part of 2% for the NASDAQ, but we're off the lows.